we have a panel on the 101 of security token offerings. I would like to welcome Brian Elders, our moderator of the panel, founder of Source Digital. I've got also Mathieu Cottin. There we go. He's the co-founder and CEO of Tokeny. Amparo Garcia Flores, only the second lady today on the panel. She is the business development director for the EMEA region of Securitize. We've got Philipp Sandor. He's the senior manager for business development, hello, of Tangany. Alex, our co-host, and Tristan, who just gave his presentation. On a side note, I lobbied for you, for the audience, right? So we're shortening the panel for about 10 minutes, and we give you an extra break because otherwise it would be a very intense afternoon. Very interesting, but intense. And we want to also give you the chance for all those who haven't to taste JoyBräu after this panel. Enjoy.
Thank you. Okay, so I hope that you enjoyed the morning. I certainly did. In the morning time, we were looking at things sort of from a slightly theoretical point of view. I'm very excited about this panel. I think we could probably stay on for about 5 hours, but we don't have that long. But we're talking about the practical implementations of STOs and things that have actually happened. So we have a fantastic panel here. So maybe I'll just ask you all to quickly introduce yourselves so that everyone knows who we have. Maybe starting with you.
So my name is Amparo Garcia Flores. I work for Securitize. Securitize is a company that has a full ecosystem regarding the tokenization of assets, and it has the primary and the secondary business of security tokens. And I've been working for over 20 years in financial services. The first 18 in Santander Bank in different roles, starting with investment banking and then digital transformation. And I'm currently responsible for the development of Securitize in Europe.
Thank you. And I'll continue. Hello, everyone. Philipp Sandor, my name. I'm working for Tangany, one of 4 regulated crypto custodians here in Germany. We are a company really focusing on enabling any different kind of companies, especially in Germany, but prospectively for the whole European Union, to bring their ideas and projects into the blockchain space, providing them with a regulated wallet infrastructure in many different technical aspects, but I'm sure we're gonna come to that later.
Hi everyone, I'm Mathieu Cottin, the Chief of Operation and co-founder at Tokeny. Tokeny is a company, a 5-year-old company now, Luxembourgish-based company. We are a group of 30 professionals, and what we do, it's easy. We provide the tech for people who want to tokenize their assets. We provide everything you need to facilitate the issuance, the management, and the transfer of tokenized securities on public blockchain.
I already had 15 minutes of introduction, so Alex, thanks.
Hi everyone, my name is Alex. I'm co-founder and managing partner at Manta Capital. If you don't know who we are, what we do, we are a BaFin licensed broker-dealer for the whole European Union, focusing on digital and tokenized assets. This means we guide issuers like JoyBräu through the whole process, from structuring products to providing technical infrastructure through partners like Tokeny, like Securitize, and then also support them in the placement on the capital market.
Okay, so I think how we should run this is there's loads of great questions earlier on, so please feel free to interrupt and ask questions at any time. But maybe I'll start off with just asking a quick question of Alex, because we're talking about practical experiences, and the very first cross-border retail STO was done by Black Manta a couple of years ago. It was a property deal. Maybe you could just explain to us how that came together and what lessons and challenges were overcome on that journey.
A lot of lessons, a lot of challenges. I think, so the market is not there yet where we would like to have it. So to be honest, there are a lot, I would say the majority of STOs are not successful. And then we need to ask why. There are 2 types of STOs in general. STOs for fundraising, like for example JoyBräu, but we also have companies that do an STO just to tokenize the current cap table, to enable their shareholders to trade shares. So it's not the fundraising part they're looking for. STOs which are not successful, I think the two main reasons the whole industry, the whole market needs to address. That's still education. So we have a lot of investors, retail, but also institutional, also professionals. Why do I need a wallet? What is a wallet? Blockchain, Bitcoin. You know, like a lot of disinformation also, and a lot of education is, I think, key. And the second challenge we have, in particular with institutional investors, is technical infrastructure. So what do I mean? We did some projects in the past where we had investors, they were willing to invest. They said, yeah, great project, we would like to invest, but my asset management system, I cannot invest in tokens. I'm not, it's not possible. So that's why we need companies like Tangany or other custody providers providing banking grade custodial services for such asset managers, wealth managers, or other institutions.
Okay, so maybe I could turn to Matt next and ask you, you're involved in a lot of these projects every day of the week. What are the essential ingredients that somebody needs to think about before tokenizing a financial instrument?
Well, there are several aspects to be covered here. I would say three main aspects. First, if you want to tokenize a security, you need to look at the legal aspect of it. When you tokenize a financial instrument, you're not creating a new animal. You have clear laws in place. Here in Europe, we have MiFID, and you need to respect these laws. Even so, you are looking to represent your equity, a note instrument or other type of financial instrument on a decentralized infrastructure, you need to answer the first question, what does represent the token? What are the revenues attached to the token? What are the rights attached to the token? The legal work that needs to be done remains the same. It's not a new animal that you're creating. So that's the legal aspect. Once you've covered the legal aspect, you need to start looking at the interesting part, the tech side. So here, that's where Tokeny comes in. You want to decentralize the representation of your product. So you need to look for the right infrastructure, the right blockchain. There are different options. We've seen financial institutions over the last 5-10 years going for an approach with Corda, Hyperledger, with environments that I would say are not fully decentralized, because I think they were afraid, they wanted to keep some control. We at Tokeny, from the very first stage, we decided to solely rely on EVM-compatible environments, Ethereum virtual machine, meaning that when you deploy on an EVM environment, you can write the smart contract in a Solidity language. Why did we do that? Because today, the most active community of developers in the blockchain space are Solidity developers. You have 200,000 Solidity developers out there. And I can tell you there is no bank in the world that can compete against these guys. It's impossible. So that's why we rely on public EVM-compatible blockchain. And after looking at the tech side, you will need to look at the distribution, which is a very important aspect. The distribution does not have to be misunderstood. It's very complex. You're still trying to promote a financial instrument. So you need to work with the same traditional actor for distribution. And on top of that, today, you are adding the complexity of the tokenization. So you need to sell your product, you need to commercialize a financial instrument, and you need to educate, as Alex was saying.
Okay, so maybe over to Securitize and Amparo here. So where and when then do you see clients coming to that want to do an STO? What?
Let me go a bit back on that and talk about our story. Okay. Because our story is an explanation of when and why do an STO. We started as a spin-off of a company which was Spice VC. Spice VC is a venture capital, and they are specialized in blockchain projects. Once they started raising money for their own projects, they found out that the way they had to raise the money was not the right one for them, because it was a traditional way of raising money, whereas the projects they were trying to impose and develop were more in the blockchain arena. So they said, why doing this like this instead of doing our own way of doing things? And that's when the first STO was created for us, ourselves, not for anybody else, but for ourselves. And we did it we created a platform and we created the full ecosystem for our STO to be successful. That gives us the information on why we did it. And why we did it was, on the first instance, because we wanted to give access to investors that were not the traditional investors for those funds. We needed to approach investors that were not only institutional, but they were individual investors. And we wanted to do it in a way that was easier for them to invest. So why? Because we wanted to approach retail investors and individual investors overall. So we don't want to just look for institutional investors. Second, because we wanted to have the effectiveness and the efficiencies in the processes that were not in the traditional system. Thirdly, because we thought we wanted to stay in private markets for a long time. We believe there is room for private markets more than public markets, because most of the growth of the company these days and the value creation is held in private companies, and the investors want to invest in this kind of companies. And fourth, because we wanted to have liquidity. And in the ecosystem we created, we also had liquidity.
Okay, so now then I suppose we can go back to Tristan and we can say, some of the infrastructure is here already. We haven't got yet to what to do once you get it. We'll get to Philipp in a minute. But so then we have the infrastructure ready. So what, in your view, is what sort of firms can approach doing an STO, and what are the ingredients that it takes to make it a success?
Well, as a startup guy myself, I do think there's a huge potential to expand the market from real estate and the kind of more traditional STO projects to more unconventional companies like ourselves, and kind of provide a next stage of evolution in terms of crowdfunding. I think the STO realm really has the potential to deliver this kind of platform. And I'm very excited that we're the first one to kind of showcase how it's possible. And I've talked already with lots of startups from the ecosystem, and they are really interested in what we're doing here, and really hope to set a precedent for startups, especially with a little bit more traction like ourselves. So I don't really think that it's a viable option for seed phase, but for like Series A, Series B type startups looking for alternative ways to finance the company without dilution, and also with the benefit of an STO being on the equity side of the balance sheet, at least how we structured it. It's definitely a huge opportunity in startups, particular with intellectual property or other types of assets where the company value is a little bit more understandable for also retail investors.
Cool. I'd like to add something here. We have on the next panel, we are talking about asset tokenization, what assets are fit in the token ecosystem. We have done like tokenized funds, tokenized real estate, tokenized corporate finance products in the last few years. And without any marketing, we're getting approached almost on a daily basis from projects who want to do an STO. So this is the good side. However, we also need to tell almost every client or everyone who approaches us, like, not because you just have like a fancy website and now you're tokenizing yourself, money will flow in. So it's still a lot of hard work, and a lot of projects are not fit for an STO. So I would say 95% or even more of projects which approach us, we are not doing, we are not working with them, because not every project, not every company, it makes sense for them to do an STO for financing.
100%. But when they do get to the end, you need to custodize these things somewhere. And this has been a sticking point, I think, for everybody at some stage. So maybe I'll just ask Philipp to just explain to us why that part of the ecosystem is so important.
Mm-hmm. So we as Tangany, we have few different kind of clients from various different kind of industries, ranging from traditional financial services, being banks, first and second tier banks in Germany, prospectively in Europe as well, as I said, with MiCAR coming at the end of this year. But tokenization projects are a big focus of us as well. Having two different kind of technical solutions ready, meaning on the one side, an omnibus solution where you have one wallet, where you pool all the assets of the retail client in one wallet. But on the second side, a segregated wallet infrastructure, meaning that every retail client on the chain, so Tangany being the base layer, the first B in the chain, Tokeny, for example, being the second B in the chain, and the retail client, the investor on the end side, will get a individual wallet in our infrastructure. So infrastructure-wise, I think personally, to enable tokenization projects to be successful, you will need to somehow offer individual wallet infrastructures to everyone. Wallets where individuals can not only invest or use security tokens from JoyBräu, for example, but many different kind of other securities or security tokens in one certain wallet. So infrastructure is definitely key here. Being a regulated player in Germany means that we are responsible and taking care of key storage for the retail client. We are the ones storing the private keys in our infrastructure safely. So that's another really important thing when you look at tokenization, because from my point of view, a lot of tokenization projects are still B2C kind of structured offerings, right? So a lot of tokenization projects fail with their marketing budget, since pushing it into the market requires a lot of capital. And therefore, having a regulated infrastructure in place and taking the hurdle from retail clients to basically, or giving them the opportunity to get a wallet from Tokeny, for example, and not having them to set up an own wallet, be responsible for their keys. So that's a really key thing in my point of view for enabling tokenization projects to be successful.
So making it easy for retail and
yeah, to step into the whole market, yeah.
So if we then get to the stage of, okay, we've done an STO and it's out there, maybe I could ask for some perspectives from Amparo and Matt about the secondary market after that and where it is today and where we see it going, because I think we're really at the genesis of liquidity and volumes and everything else.
That's really the important topic, the secondary markets. As Alex mentioned before, I think liquidity is one of the most important promise of blockchain, and that's what all our clients are looking for today, the liquidity aspect of the token. So let's be honest, today you have different initiatives that are being run on the market for tokenized securities. You have the approach from traditional financial player, MTF here in Europe, ATS in the US. We've seen some of these players already approaching the field, starting listing tokenized securities. There is very little liquidity at the moment from these players. I think we need to go one step further. There are an important aspect that needs to be tackled, which is the interoperability. If we want to reach more liquidity, we need to work together to build an interoperable infrastructure. That's what we are doing at Tokeny at the moment with our Dino network initiative. We're working with several players around the world, like Acetera in Europe, Arcax, many other players, and we're trying to build an ecosystem where everyone will represent their tokenized securities with an interoperable format. And from there, we will be able to leverage the liquidity from different endpoints.
And pool it together, yeah.
Exactly.
Securitize also are providing some liquidity, yes?
Yes, we are. As I was saying in the beginning, we've got the full ecosystem, and that's part of the success of Securitize. We work in the USA. We're a regulated entity in the USA, where we've got a transfer agent, a broker-dealer, and an ATS license. And this ATS license is the one that lets us having liquidity for the products that we've got within the market. It's true that it's difficult to get liquidity because obviously the number of customers that there are within the platform, although we already have 1 million customers who are already able to operate in the market. Some of them, because of the kind of issuances that we've done in the past, cannot operate yet because they've got these stocks and they cannot be traded until 1 year later. So we will be seeing, I think that it's a question not only of the liquidity of the market as such because of because of the market, but also because of the way the issuances take place. That at least in the USA, they make you hold your issuances for 1 year before you're able to trade them. Having said that, there's trading there, and what we are seeing is that the volatility of those markets is much lower than the one we've got in public markets, which is very good news, because that will give us the opportunity. Sorry, I don't know what's going on with my voice. So what we are seeing is that the market is working in a very good way. That's one of the reasons why, for example, people, and we were talking about first on equity and debt, but Alex was also pointing out that there are funds doing issuances. We have just announced the issuance of the first fund from KKR of $500 million in tokens, and we are handling another three STOs for funds with Hamilton Lane in the fourth quarter. But these people are coming because they see there will be liquidity in the market, especially because they will, up until now, they just had institutional investors, and they will start having also individual investors within the markets. One of the things, sorry, and I'm finishing because I know I'm speaking a lot. One of the things of this liquidity issue is that most of the investors we've had so far are accredited investors, and although accredited investors are around 10% of the whole of the households in the USA, and it's similar in the European Union, it's not the whole arena of people who are able to trade in small portions, and the portions are big enough so as not to be that much traded.
Okay, well, I was going to go on to some adoption questions in a while, but I think we've now kind of covered a little bit of some of the practical items about, you know, how you can create and bring to market up to trading some security tokens. But I suppose on this stage we have people who have, you know, gone through the fire of bringing these things to market, and I'd just like to open up to the floor for some questions at this stage, if anybody would like to ask something. Oh, everyone is there.
No, there was.
Oh, we haven't? Okay.
Someone has to start, right?
Yeah.
Hi there. The structure of the case study that was provided, is that debt or equity?
Maybe you would like to answer that one?
Yeah, so on the balance sheet, it's equity, but it's a revenue participation. So each investor gets a percentage of the revenue of the company. Does this answer your question? Or?
Oh, it's a German issuance, yeah?
Yeah, German issuance.
So it's a particular type of German product.
The good thing is in this case, like on the balance sheet, it's equity. So in case you would do an additional funding through a bank, this would be counted already as company's equity and not debt.
Okay, we've got another question here.
Just for this point, so no voting rights, right?
That is correct, yes.
Yeah, just profit sharing and no voting rights, right?
Exactly, yes.
Okay.
And that's probably the beauty of an STO. You're completely flexible or open how you want to structure it. There's no one product which must fit all. You can customize what fits to the company, like you said, like voting rights, revenue participation, profit participation, whatsoever, what fits the company, but also what is acceptable for an investor.
Okay, so I'd like to talk, oh, sorry, go on.
So what is a reasonable volume for issuing an STO from your point of view? Obviously, it depends on the product and the asset, but what is reasonable? Is it 2 million as for JoyBräu, or is it 5 million or 500 million? So what do you think?
I can take that one if you want. I think there is no minimum volume for a simple reason. That when you tokenize, when you start tokenizing a financial instrument, you can start playing with the revenue model. We have some clients who have tokenized a note instrument, for example, using our solutions, where after the tokenization, setting up what we call a billboard to facilitate peer-to-peer transfer. And thanks to that billboard, they can start charging fees. We have clients charging a monthly or a yearly fee to allow people to post ads on the billboard. We have clients charging a fee every time you want to unlock the contact of a potential seller or buyer. And we even have clients charging percentage of the transaction. So that's why I don't think there is a minimum to be taken into account. Of course, let's be honest, if you want to tokenize an issuance, it's going to cost you more money. You still have your legal costs, you still have the distribution cost, and on top of that, you need to add the tech cost. So it's going to cost you more money on the primary market, but it's a total game changer on the secondary market.
Yeah, I want to add on that in the end, the minimum or maximum depends on your capacity to raise the money. And the capacity to raise the money is the same as in traditional markets. So these are securities. They are either digitized or physical securities. They are securities. And as such, there needs to be a need from the customers or interest from the customers to invest in those securities. So it's more depending on the business plan of the company, the growth of the company, the marketing capabilities of the company to be raised than on the sizing. We have had it's true that if the issuance is more related to crypto spaces, is easier, for example, and that's because the people who are going to be the investors are more crypto oriented and therefore have more trust in this kind of products and so on. So there's a bit of a skew in terms of the business activity, but most of it's depending on the traditional side of the business. So if it's an attractive investment, then people will want to buy it. Otherwise, regardless of whether you show them 2 million or 500 million, nobody's going to invest.
There's probably one reason of what we see when talking to clients, and it's the legal one. You have certain requirements when issuing a token. And in particular, if you want to go retail, you might need a capital market prospectus. And there's this 8 million threshold. If you raise below 8 million in the European Union, you don't need a capital market prospectus. This means less costs. And so this is probably one reason. And the other reason, so another exemption is if you only target then professional investors or have a threshold in the minimum ticket, then you also don't need a capital market prospectus. But this is like one of the main reasons we see when people limit their STO to 5 million or 8 million.
And the beauty of tokenization also, Alex, is that indeed we have many complex laws that are telling you what to do on the primary market. You obviously, it depends on the country of issuance, it depends on the country you are targeting, it depends on the type of investors you want to reach out, if you want to go towards retail, prospectus, light prospectus, or private placements. The beauty of tokenization is that all these rules that still need to be enforced on the secondary market can be encoded in the token. So the day the JoyBräu token will start to be traded on the secondary market, we have already enforced all these rules at the smart contracts level. If you buy some JoyBräu tokens tomorrow, the day it will be open for secondary market, you will only be able to interact with a counterpart that has been KYC checked by JoyBräu, which will take care Black Manta, that is eligible, that lives in a country that is authorized. All these rules will be verified at the smart contracts level. That's where you gain, that's where you can trade faster, and that's where you can have more liquidity.
Brian, allow me one more question here.
Okay.
Very short one. Did you ever work with or hear about a special purpose acquisition company that is tokenized?
Not yet. A special purpose SPAC, a tokenized SPAC. We've heard about ideas.
We wrote a blog, an article a few months ago about tokenized SPACs. We haven't seen ones in Europe. We are currently having a program with the International School of Management somewhere in Germany, I don't know. And we're doing one semester with some students working out some options for tokenized SPACs. I think this is a super interesting field.
Are we okay with taking a few more questions and engaging the audience?
Where we'll get to is customer adoption, but we can take questions.
One question from the investor's point, because I was listening to your very interesting speech and I don't know the conditions of your offering, but assuming 3 million cans, ex-factory price 1 million, that means approximately 60,000, let's say for on 2% means a 3% yield. What is in your paper? What is the average growth rate? So what do you assuming? Let's say on a base case level, what is the interest or the IRR for investors in your STO?
So in terms of our base case, the BaFin approved, we are assuming a 40% CAGR. And with that, yeah, we calculate conservatively. Of course, there's more potential, and yeah, but that's what we've kind of assumed for the case.
We'll take one more because we might, and then yeah.
Thank you so much. And I guess it depends really on the case. But can you give a rough estimation what an STO costs, and maybe adding on to that, how much is one-time setup cost, and if I want to do it again, how much does the cost change? For example, for JoyBräu, now you have done it one time, maybe you do it again. How much does the cost come down? What is fixed? What is variable?
Maybe I'll start that off. It's a really hard question to answer because it depends on so many different variables. You know, public, private, country that you're in, technology that you're using, etc., etc. I think that what it's fair to say is that if you want to do, say, an internal STO that Alex described, you're starting off at what in capital markets would be considered a very modest cost. Yeah, go into details over a coffee later, and then when you go up to, say, a cross-country retail offer, then you're adding cost to do with everything from translation to legals to you name it. So it's a very, very difficult question to answer. The simpler the product, the lower the cost, but you can make the product as complicated as you like.
How many zeros?
I think that you should, for a simple one, it's going to cost you more than 10,000 and less than 100,000. So in those zeros, but it's kind of like marketing budgets when you get into lawyers and law firms and everything else like this, you can spend as much as you want.
Maybe just to add to that from a practical point of view, as I mentioned, we were comparing traditional crowdfunding with STO, and the cost level was also quite comparable. So no surprises there.
Yeah, so it doesn't need to be terribly expensive, but it can be. Yeah.
Okay. Are you okay with taking one more?
Why not? Why not?
I mean, it's for the audience. This is why we're doing it, right?
And these are practitioners. We are practitioners. We do these things, yeah?
Hi. So for the revenue payout of 2% that you said, so are you doing it through a manual process? Are you thinking about putting in a smart contract, which then does the payout? If yes, why? And if no, also why?
I can take it. Yeah, sure. Yeah, well, actually, all these events could easily be managed on the blockchain. We have already prepared the smart contracts to automate the revenue distribution to investors. There is a reality, the reality of the market, that today most investors do not want to receive stable coins yet. So when you proceed to revenue distribution today, you have to handle parts of that revenue distribution through the traditional banking system, and you can handle maybe a small part of it towards the few investors who will accept to receive stable coins in their wallets. And that's why when you have this dual system, it's very hard to automate it. And at the moment, these distributions are still handled manually, partially on the blockchain and partially through the traditional financial system.
So maybe we'll just speak a little bit now about the adoption piece, because I think even at the beginning, Alex said that there's a lot of challenges in the adoption piece, but we'll start off maybe a little bit technically with Philipp, and you have it's the new the Electronic Securities Act coming in Germany, and you think that that's going to help the situation. Maybe let us know about that.
I mean, regulation is a key in tokenizing or security tokens, since we're tokenizing securities in the end. And from a regulator's perspective, consumer coverage and to keep them safe is the highest priority. And when we look at the Electronic Securities Act and the possibility to issue securities on the blockchain right now, that's really unique, what the regulator in Germany made happen here. So technically speaking, and this you probably know better than I do, a crypto security, as we call it, or Kryptowertpapier in Germany, it's nothing else than a security token, technically spoken, with a different regulatory layer. So in the end, it should bring some more trust in security tokens in general and make security tokens more appealing to institutional investors. With that, adoption is probably picking up quicker, yes.
So, okay, so the trust thing is important, and I think having big brands and everything else get involved is important too. And that's why I wanted to ask you just about KKR, which was announced publicly recently. That is obviously a big name, and hopefully it will help the whole industry to move forward. Can you maybe just let us know a little bit about how that's working, what it is, and how hopefully that can help with some more mass adoption?
Yeah, this is about a fund. It's the e-health fund from KKR. It's 5,000 million euros in overall, and we are tokenizing 10% out of it. It's directed to accredited investors. Accredited investors are similar to professional investors in the European Union. So it's high tickets when compared to a crowdfunding issuance, but it's similar in terms of the way we do it. What we are doing here, and the beauty of this, is that we are simplifying everything relating a fund. And we are creating a feeder fund in which we are taking out everything that has to do with capital calls and everything that has to do with additional asks for money afterwards, so that we are creating a product that is more liquid, easier to be sold, and easier to get this trust from the investors and then sent to other people. It's going to be traded afterwards. And that's the liquidity we're going to be giving that is not currently in any of the KKR products in the reality.
Okay, very good. It's I think it's great to see big players like that coming in, and I hope that when we're sitting here next year, we'll have a lot more names on that list from us all. So Tristan, you're the next that I had here. About how do you think that this become more mainstream? What are the steps that need to be taken to help this get out to everybody?
Well, actually, I think we've talked a lot about most of the most important topics already, which is definitely education, but also ease of use. So making the whole process more understandable, particularly for retail investors who aren't as familiar with the crypto space as most people here in the room. So this will definitely be a key point, especially when targeting more non-traditional tokenized assets as well. So that's what we're really looking forward to with great partners like Tokeny, to get to a more natural flow that is more similar to kind of better learned financial assets for retail investors. So this will definitely be key.
Is there still some mystery around tokenization, that it's some sort of hocus pocus that we need to somehow get through, yeah?
Exactly, and also in some cases even maybe bad stigma in terms of, oh, blockchain, I don't want to do anything with that, or Bitcoin, oh, dangerous. We still have this kind of stigmata in the retail investor space. So this is definitely something we should work on as a whole industry as well in terms of marketing and PR.
Okay, and Alex, your perspective, you've seen so many of these things.
So when we founded Black Manta 4.5 years ago, we had a theory that everyone who invests in crypto wants, at one point, bring his crypto earnings into a safe haven and then will invest into security token because it's the same technology, but just another asset. Interestingly, like I would say 99.9% of our investors are paying with fiat, and they're not crypto investors. Why is that? Because crypto investors, they have other expectations in terms of revenues, yeah, and value increase, etc. So all our investors are traditional investors who would also invest into the real estate if it's tokenized or not. And that was interesting. So and that's why education is so important, because they are not familiar with any of these things.
So it's like the two sides. The crypto natives don't really know about STOs, and the fiat natives are worried about it being on a blockchain.
But this is changing, I think, when we've seen that with the last crash. Every crypto investors, one myself of early stage, they've all been looking for stable sources to put their funds in, and they've been looking at stable coins, USDC, USDT. That's the movement we have seen over the last crash. So the value, the revenue share of these stable coins have drastically increased. And I think there is really an opportunity for a serious financial product, which are not giving you maybe 300% a year, maybe 2, 3, 4, 5% a year. There is an opportunity here because these people are getting more alerts. They're getting educated about what is an investment. And they, I'm sure, will start at some point to look at security tokens as a very important part of their portfolio. Maybe not 10%. I'm sure crypto holders will own at least 70, 80% of their portfolio in security token within the next 5, 10 years.
Well, that's very positive. But I know one of the other things that we talked about earlier was you also think that the role of regulation, appropriate regulation in this space is important, because if you're that crypto investor, you might be withdrawing that money from, I don't know, Uniswap after trading whatever coin it is out, and then you need to bring it into the financial system. Maybe can you share some thoughts on how that appropriate regulation will help?
Yeah, no, regulation is very important. If we look at the reason why do we have regulators, their first goal is to protect investors. That's the first purpose of a regulator. And that's why I agree with you, Philipp. This new act is very important in Germany, because today the law as they are defined are imposing you to work with specific stakeholders in the value chain, which cannot bring you the security you need when you want to start dealing with blockchain. You need these guys. You need people like Tangany, like Fireblocks. These entities are the one you need to go to if you want to protect your assets on the blockchain. And that's why we really need regulation to cover this aspect. We need to stop putting all these laws in the box, the same box as we've been putting it so far, as I were explaining this morning. And we need to drastically listen to these companies, what they have to say, what is important to be covered.
Very good. We have a little bit more time now, so we can take some more questions from people, if anyone has some questions now.
So one question to the practitioners: for what do you think on NFT? Does it bring more people being acquainted to tokens, and so also then investing in security tokens? And staying in the drinking industry, the new Ben Riach NFT for the 40-year-old Ben Riach, which was brought out as an NFT. Do you think people get more used to having tokenized thing, and then it's more convenient also to have security tokens? Or do you think it's getting them more in the esoteric way, that they see these things that don't have a, so to say, they don't have a real investment grade behind it, like a security token? I'm a little bit, so to say, floating between the two things, but would be very interested in your view.
Maybe I can start that off, and I can say that NFTs already, if you look around the world, you have ones that are kind of the ones that are most popular and well-known, are like the art ones, but you also have financial NFTs, which maybe we'll talk about a little bit later. They're used in some DeFi applications. And you also then have NFTs that are securities, and in particular you see that in the US rather than over here. So I think that the use of NFTs we will see across all aspects of the market, the unregulated, the regulated, and the still to be regulated parts. But I think undoubtedly what's happening with NFTs is catalyzing interest, and it's also forcing many companies and firms out there to find easy ways to onboard more people who don't necessarily want to have a complicated wallet with all sorts of ways of recovering and things like that. So I think there's a lot of positives in NFTs, I would see. So maybe I'll let the rest of the panel talk now.
Yeah, I agree. It's a great application. You can use NFTs in many ways, but I think there are specific applications. If we speak about financial product, if you look at MiFID, it is clearly said that a financial product has to be fungible. You cannot use an NFT to represent a security. That's not possible. That's why at Tokeny, we leverage permission token, ERC 3643 standard. Sorry for this, that's a bad word, but what does it mean? It means that we leverage a decentralized infrastructure, the blockchain, no one can control it. Each of you can operate a node if he wants to. You're part of the infrastructure. But on top of that, we ask clients like JoyBräu, what are your eligibility rules? What are the conditions that needs to be respected when there is a transfer of token? This token can only be owned by European investors. This token can only be owned by people who have been KYC checked by Black Manta. These are the eligibility rules you can enforce in what is called a permission token. So I love NFTs, I have many myself, but they come for their own purpose. And when it comes to financial instruments, I do not believe in NFTs.
We are in the same arena. In fact, we do not deal with NFTs. We just deal with security tokens, and the reason is because we want to be within the law and we want to give trust to customers, which was the very beginning of this conversation. So, in order to give trust to the customer, for the tokens to be opposed to third parties in terms of any miscarriage, any problem, you have to follow the rules, and the only way of following the rules is putting the rules in the smart contract, being regulated, doing the AML checks, doing the full KYC, and that's only in security tokens.
Does that answer the question?
I still think, as you said, that many people are attracted and get acquainted to the principle on having tokens and having such products. And for them, it's easier and they step in using it. Also, it's another security underlying technology, but for them, it's much easier and they get easier acquainted to security tokens and put them in their portfolio.
Okay. We never talked about soul-bound tokens. We can do that later.
Got another question down here.
Yeah, I think it's also connected to what we've been discussing right now. With regards to the users of these STOs in the long term, do you see that the mass market adoption in the developing world would be a bit higher than it is, for example, in the European context? Why I'm saying that is that in countries in Africa, for example, there has been a sort of a movement towards working towards, securing investments that are dollar dominated or euro dominated, and security tokens provide that security, that they are also backed by real world assets. So do you think we are developing European solutions, but the end user, which is going to adopt this on a mass level, is going to be from the developing world?
Good question. I think that a lot on this stage is US and European regulated. So I think that it came up earlier on, I think on the legal panel, I think that there's some issues to do with how securities cross borders. And that's something that I think is going to be very difficult to overcome. So there will be, I'm sure, innovations that will help catalyze this, but I think there will be challenges with some of those cross-border products.
Although we are working on that kind of products.
Yeah.
I can tell.
They're coming.
They're coming. That's one of the reasons why I'm here, is because we've got the licenses in the United States. We want to have the licenses in Europe to be able to trade in both areas and do interoperability among the two markets.
Do you see much demand from emerging markets outside of Europe and the US?
I'm receiving many calls on them. And emerging markets, in other industries, in everything that has to do with telecoms and so on, the adoption of new technologies has been higher than in the developed countries. So I see much interest from an investor point of view, although I think it will take at least a bit more than here to have deregulation going and being able to operate.
Okay. Any other questions out there? Wow.
If we don't have any other questions?
We're down to our last minute and a half, so we can
okay.
Give everyone an extra minute.
One very last question.
Oh, we've another one. Sorry.
Everybody knows examples of successful crypto or NFTs, but can you maybe give some examples of the most successful STOs? Because honestly, I don't have any in mind.
I've got one. I mean, one we've done
in
for us is Exodus. We raised $75 million in 60 days, and it's already starting to stock in the secondary market.
You could mention Spice and Cosmo as well.
Spice, Cosimo. Yeah. I met one of the founders of Cosimo before, yeah. And they're very successful as well.
In Europe, you have the EIB.
But I spoke on Spice as my parent before, and I didn't want to.
There's EIB in Europe have pioneered some things, although could you say it was a real sale? Maybe not, but they definitely issued a bond to banks who then bought it on the blockchain. So, and I think everybody here, maybe quick success story each, and we round it off.
Yeah, for us, it's our biggest client is Enegra in Malaysia, and we tokenized $27 million for them of commodities. So the tokenized product is commodities. Our commodities, it's a precious metal.
Maybe from us, some insights. One of our biggest clients in the tokenization field is Amparo, real estate tokenization in Germany. Next to them, we have projects like Econos, InVentures, so venture capital fund tokenization, really different wide of varieties.
And of course, JoyBräu. Okay, thank you. We're over time now. So
thank you so much, everyone. A big applause this time for the panel. Maybe you want to give one to the audience as well?
Thank you.